This is the FFR Trading Market Minute, and again, this is the SPY, the ETF for the S&P 500, and we just track this as it's an overall proxy for the U.S. stock market. Last week I had mentioned we hit my upside target there at 612, and you can see that was the peak. I don't know if I probably forgot to mention that the RSI was also overbought here, and so you'll see that a lot in the SPY. You know, the market tops similar to here. RSI is overextended, right? That's where the top came in before we got a pullback there. It's giving you a warning sign that the market may be overextended and it's going to pull back. Now, on the opposite end, we dropped, hit the first downside target here, which was basically this trend line, and the simple moving average is just a 20 period simple moving average here. Blew through that, and we got the RSI now overextended to the downside, what we call oversold. So this, in other words, this price has dropped too far too fast and tends to, when this happens, snap back like a rubber band. Right now, you know, here was the low here. We had some negative news earlier this morning about the Trump tariffs on China, and that, you know, drove the market down. We didn't break the prior low here of the three candles here, but it has since, you know, recovered a lot of that. The key next, though, will be, all right, so the RSI did get overextended, but we're going to have to see this RSI move back above its moving average here, similar to what happened here. So it peaked out, and then the RSI crossed below its moving average on this day here. So once this day closed, the RSI had crossed below its moving average. And what tends to happen once that candle low breaks, right, which it did the next day, you tend to get some good follow through. So in order for us to get some follow through here, we're going to need to see the RSI come back up and cross back above that moving average. If it doesn't, then chances are, you know, we may rally somewhat and then roll over again. Here's the next downside target, which would be a gap fill from back here. All right, I've had that line in the chart for many weeks now. All right, to the upside, again, this 20 period moving average will act as resistance. We can take this off here now. All right, that will be the next upside target. All right, so we'll see how this plays out. Some of the high impact economic data reports set for next week: Monday's ISM manufacturing PMI, Wednesday's ISM services PMI and ADP employment, and then Friday the average hourly earnings and the big non-farm payrolls report. Hope that helps. Have a great rest of your trading week. We'll see you back next week in the FFR Trading Market Minute.